So if you own your own business in Canada, chances are you need to get set up with a GST account and then collect GST on sales and then remit that to the federal government through your My Business account. Now, what is GST and when do you need to register for a GST account and start collecting that? I've covered that in other videos, so I'm not going to go into detail here, but most businesses need to get set up with GST and they need to collect it on sales and remit it. It does depend a little bit. Certain companies are exempt or certain services are exempt or certain sizes of businesses are exempt. But again, that's covered in other videos. In today's video, I just want to make one quick point about GST and how you are doing your bookkeeping around GST and then how you're filing your GST remittances and your income tax. So for starters, I find a lot of early stage entrepreneurs just kind of clump in all tax together and they don't realize that there's provincial sales tax, that there's federal sales tax, GST, and that there's income tax. Those are three completely separate things, with some exception for the provinces that have HST, that harmonized sales tax. That's clumping together PST and GST. But for other provinces, like where I live in Saskatchewan, we have a completely separate PST, provincial sales tax, which is run through the provincial government. And then we have GST, which is run through the federal government. And then on top of that, there's income tax. All three are three completely separate things that have three different filings. You file for PST with the provincial government, you file for GST with the federal government, and then with income tax, that's both, but you file that all in one return. So when it comes to GST, the specific point I wanted to talk about in this video is how you account for it with your bookkeeping and just making sure that you're not double counting it. So what I mean by this is you could potentially claim an expense that you paid for your business and include the GST portion in the expense. And then at the same time, include that expense for GST as a GST income tax credit, which is an ITC, when you file and remit your GST. So I'll give you a quick example. Let's say you go buy like a new printer or a new chair or something like that for your business. As a business expense, we'll say it's $100. So let's say, for example, you buy that in the province where I live. You pay $100 for the item plus GST, which is going to be 5% or $5 in this case, plus 6% PST, which is the rate of PST in Saskatchewan. So in total, you're paying 11% tax. Now with GST, if you're registered with a GST account and you're collecting that on sales, then you can claim those GST input tax credits, which I've also covered in another video, but that's basically claiming all the GST that you spent for business expenses to go against the GST that you've collected on sales so that you just have to pay the net rather than paying forward the total amount. So the important thing to note here is that you're not double counting. If you're set up for GST and you're claiming your GST expenses, in this case, that $5 as a GST input tax credit, then you don't claim that on your tax return as a business expense because you've already claimed it as a GST input tax credit amount. Because if you claim both, then you're claiming it as a business expense and a GST input tax credit, and it should just be one or the other. So in the case that you don't have a GST account, you're not collecting GST, you're not remitting GST, then you don't claim GST input tax credit. And in this case, that $5 would just be clumped in with your business expense. Now, when it comes to PST, it might depend on the province a little bit, but at least here, if you are paying PST on something, then it doesn't work the same way as GST, where you can't claim that as an input tax credit. You would just clump in that PST expense as a business expense. So in that example, $100 plus $5 GST plus $6 PST, you would typically claim the $100 plus the $6 PST as a business expense, and then the $5 not as a business expense, but as a GST input tax credit. So you're not claiming $111 on your income tax return, you're just claiming the $106 and then the $5 separately. So hopefully that makes sense. I know our tax system is confusing both with sales tax and income tax, and it's more complicated than it needs to be, but it is important to understand these things and get it right. You want to avoid running into penalties, or if you get audited, you want to make sure that you can get that sorted out quickly. Anyways, though, hopefully this video was useful. If so, please click like and feel free to check out my YouTube channel here, where I currently have over 200 videos that cover business management and business startup topics. And if you ever want any help starting your business or improving the way your business operates, feel free to reach out, as I do offer a free initial consultation, and I will leave a link to book that in the video description below.